our Market Master column now is Gautam Trivedi, Managing Director and Head of Equities at Religare India Capital Markets. Thanks a lot, Gautam, for joining us this morning. Well, first up, actually levels. The markets for 3 consecutive days are hitting anything between 1.5% and 2.5% by end of day. What is the roof, the near-term roof for this market?
I think the near-term roof really is probably another 2 to 3% upside, because if you look at the domestic mutual funds and private insurance companies are mostly fully invested. They're not receiving any fresh inflows. So a lot is going to now depend on where the foreigners look at the market from these levels on, and that's really what the focus is going to be. Retail investors, and I've just gotten off the phone with our retail team, are still not participating in the equity markets. They're hopeful that they will come back, but there's no immediate sense of retail participation increasing as a function of the exit polls. So I think a lot of the retail investors will also wait until Friday to see the final conclusion before taking a call on what to do with the market in terms of entering the market or not. So I think the direction really is still from the foreigners, and the domestics really don't have cash on hand. There may be sector rotation or stock rotation, but that's really it.
So if there is a decisive mandate on Friday, Gautam, what would your advice be to retail investors?
Well, it depends on how the foreigners end up behaving, and assuming that the results are anywhere close to what the exit polls have predicted. I mean, we have an average of 277 and a range of 238 to 340, which was yesterday's number. But I think if you look at if you look at the numbers coming close to 277, which means an absolute majority, and they may still take on 1 or 2 partners to ensure even more stable government, I think this market has significantly more upside than what we've seen so far. And I think retail investors, if they're listening to this conversation, I think should start entering the market soon.
Okay, Gautam, this is a niggling doubt which I kept asking everyone starting from Rajdeep himself. Exit polls in the past have got it wrong for the UPA by a 7 and 10% margin. If that happens, we are looking at a 250 or a 255 majority for the NDA, which is pretty handsome anyways. Do you think we should therefore look at this as a done deal? Because a winner with 255 will attract enough people. Is there no window of worry, is what I'm asking, even giving the usual discounted exit polls?
I think the usual window of worry seems to be probably almost not there, simply because it can't be possible that all the exit polls, and there's so many of them yesterday evening, could be so much off the mark. So I think that, if you look at, let's say, the Times of India poll, for example, the Times Now, should I say, which was the most comprehensive of them all, 5.5 lakh respondents, and they are at 249 or 250. I think I suspect the number's closer to that, the actual number, unless, of course, the entire process of taking the exit polls is so out of whack with reality, then we've got a problem. But that apart, I don't see that necessarily happening, and then my personal view is that we're closer to the 240, 250 number on our worst case. And if that were to happen indeed on Friday, I still think they can muster up the numbers without a problem. So I think what's happened after the exit polls, at least the market and the people I've spoken to this morning have reacted. What they are saying is that the NDA forming the government and Mr. Modi being the Prime Minister is now a discounted fact.
You just mentioned a while back that retail investors, whoever listening to this conversation, should enter the market at this point in time. But where does this entry point come in from? Because if you look at the performance since the start of the year, you look at PSU banks, you look at capital goods stocks, all of them have rallied almost about 30 to 50%. So where do you put money now?
Correct. Well, the thing is, first of all, let's look at the rally. The rally's been almost 34 to 35% since the low in August 27th, I think, if I remember the date, of last year. So you've seen obviously a massive rally in the Nifty since then, and of course several stocks have outperformed that number as well. But the point being that the market, even after this 35% rally, is only trading at 14.5 times forward price to earnings. So it's not really that expensive. Number one. Number two, I would urge people to put money in some of the higher beta infrastructure stocks. There is definite scope for re-rating there. PSU banks, I think, still are reasonably cheap and should attract more buying. We also like, that doesn't mean we don't like the private sector banks. We still like the Axis, the ICICIs, but definitely more room and scope in the PSU banks to catch up with the privates. So these are the two areas that we believe retail investors should be focusing on.
Okay. I'm sorry to persist with wet blanket questions, but that is just to ensure that there is no downside. You know, the GDP growth, the best estimates we are getting is 5.4, 5.3, nothing beyond that. And all of them are caveated with an El Nino bringing it down to 5%. Now, what is the earnings multiple over this? Normally, it is what, 2.5 times at best? So, I mean, will we hit an earnings roof? Or regardless, the markets will march because FY16 earnings are getting upgraded?
I think FY16 earnings will be upgraded. You're absolutely right. And the fact is, El Nino, you and I don't know. I mean, nobody knows if it's really going to happen and what's going to be the final impact on the country and hence the equity markets. So let's leave some of the variables which are nature determined out of the way for a minute. But I think the hope and, of course, the prospect that Mr. Modi and the NDA government will significantly change the fortunes of the country is really what the entire rally is riding on. And I don't think we are misguided in that, because he's done a phenomenal job with Gujarat. We've all seen it. And the hope is he will replicate that formula for the rest of the country. So I think that's really where the rally is coming from. And I think if there are air pockets like an El Nino impacting earnings or impacting certain sectors, i.e. also inflation, I think those should be viewed as buying opportunities.
Okay. Just for the very near term, post the 16th of May, Gautam, what kind of an upside do you see on the market? I mean, I heard you mention a while back about the trend, but generally, you know, these exit polls have a tendency to underestimate the winner. And if that is the case and we do see a positive surprise on Friday, then what kind of a pop would you expect on the market?
I could expect at least another 5% pop. And the reason being is that if they were to indeed, let's say, on a blue sky scenario, cross 290 or 300, what that does really is it gives Mr. Modi the whip, or whip's too strong a word probably, but the ability actually to do a lot of things which he would otherwise not have been able to do had he had a major coalition going. So I think he has, as I understand, a bunch of things he wants to do, including probably merging ministries, you know, creating a single energy ministry versus having a different power, different coal, and different oil and gas and petroleum ministry. So he can do a lot of stuff that he would love to do in a blue sky scenario. And if he does get that opportunity, I think the markets will react significantly more positively than otherwise.
All right. Finally, can you point out to us some mid caps that you're looking at?
Well, you know, we've got a few, we just came out with a mid-cap report titled The Lucky 13. This is our second series. The first one actually, same time last year that was released, outperformed the CNX mid-cap by 400 basis points. So I think 700 basis points, sorry. So this one has a bunch of names in there. We like Ashok Leyland, Gulf Oil, Finolex Industries, which is down today because of results that weren't good, but still over a 12-month period, I think will do extremely well, unless, of course, El Nino hits, and that could hurt the farming business overall. But these are some of the stocks that we like within the mid-cap space.
All right, Gautam, pleasure speaking with you. Thank you very much for joining us with all those macro and micro observations on the market and stocks.